What's going on, guys? Welcome back to the channel. It is your boy back with another intraday update on AMC. There's a lot of great things that are happening today, and overall this is a big win for AMC. We will talk about exactly what I mean a little bit later into this video, but we are looking at a possible cup and handle formation that is starting to form on the chart. So we are going to talk about that because that is indicating a possible technical breakout is going to be coming in the next week or so. As well as that, we're going to be going over the horrible jobs report that did come out today, why this is really seen as a good thing and a bad thing at the same time, and why the markets are pretty much neutral on the day. As well as that, we're going to go over the short interest data as well as the stock O tracker data. So if you guys get any value out of this video, hit that like button for me, consider subscribing to the channel, as well as let me know down below in the comment section, what do you guys think the future of AMC holds for the next couple of weeks? Let me know that information. Your guys' opinions are very valuable to me, and it helps refine my own opinions. But that goes without saying, these videos are not financial advice. I'm not a financial advisor or a financial planner, so always come to your own conclusions. We are just here to provide my opinions to further help you guys come to your own conclusions, as well as the factual data that you guys need to know. So with that, let's get straight into this video. We're going to save the cup and handle, the technical analysis, for the end of this video, because that is really the juicy part of this video. But there is a lot of other things to consider just besides the technical breakout pattern that we are seeing on the charts at the current moment. Now, let's get straight into this jobs report situation, why this is actually a good thing and a bad thing for the markets overall. And you guys can see that the markets are pretty much flat today, with the S&P only down 0.04%. So pretty much flat, only down 19 cents. Now, let's get straight into the numbers of how many jobs were created in the month of September, why this is a good and bad thing for the markets. Now, the U.S. economy only added 194,000 jobs last month. That was well short of the 500,000 expected. The unemployment rate fell from 5.2% to 4.8%. Now, investors, they don't care as much about the unemployment rate. They do care about the amount of jobs that are created. Now, we missed our own estimates by 306,000 jobs. So this was a very bad miss. But I think a lot of investors are taking this positively, because if we don't see jobs starting to be created on a massive scale and really getting back to normal, that may possibly put the tapering announcement that is widely expected by most investors to be coming out November 3rd at the next meeting with Jerome Powell. So this may actually force Jerome Powell to wait until possibly December to announce tapering. He pretty much said that you can expect it to start in November, but if the jobs report is really bad, they may push it off. Now, if the jobs that came in at the expected amount, at 500,000 jobs or even over that, then they would have pretty much been forced to start tapering. Now, I'm not saying they are or are not going to next month, November 3rd, at their meeting. What I'm saying is there is a less likely chance that they will start to do that now that the jobs report was so bad for the month of September. So I think that's why you're seeing a pretty much neutral reaction. If the jobs report was actually over the expectations, we actually could have seen the market sell off on that, like we have seen in the past when we do get these jobs report numbers that do come out. So I do think this is a big deal, but investors are really going to be paying attention to what Jerome Powell does say on the November 3rd meeting, which is just around the corner, only about 3 weeks away if you really do think about it. Now, we are not seeing, like I said, a big reaction from the markets, literally flat on the day, but what I want to point out is we are not out of the danger zone whatsoever. We are still under our 50-day moving average, and we are literally in the middle, in between the 50-day moving average and the 100-day moving average. So this could flip-flop either way. We could see a big rally over this 50-day moving average, or we could come back down under the 100-day moving average, which would trigger more trading algorithms, more people to start selling stock. Now, this is a little bit of tin, but I do think the Chinese real estate issue is going to come back up in the next coming weeks. So if you were somebody like me that pays attention to the math, and that we need the markets to come down to force the large shorts of AMC to cover, this could be a positive thing for you guys. And overall, I do think this is a positive thing if we do see the markets coming down, because let me just briefly remind you guys, if some people think the markets coming down won't cause the squeeze, it will cause the squeeze. Yes, AMC will go down. It will come to an inflection level. Just like we did see in June, the short interest went from 20% down to 14%. So only 6% of shorts were actually forced to cover. That 14% were really the medium liquidity hedge funds, and the large guys were never in a risk of being forced to cover because they had so much money to put on their positions. But if the market wasn't half and we seen went down in value, whatever the number is, then you would have a higher likelihood of seeing more shorts be forced to cover. Now, let's jump back into AMC, because that is what is really important. I don't want to get too far off topic. We can make a whole video about the Chinese real estate issue and, the stock market going down causing the short squeeze, which we might do. Let me know down below in the comment section if you guys want another video on that topic. But now, let's move on to the institutional ownership. We are seeing more 13F filings that are now coming out. And what is very interesting on this is you are seeing a lot of firms that are holding on to their positions that are averaged in way higher than where the current share price is. $47 average, $42, $50, $47, $47, $47, $50, $46, $51, $23. Point is, you're seeing a lot of these firms holding on to their positions even though they are underwater on them. Now, a hedge fund or an institutional investor would not hold on to a position they thought was going to continue to go down in value. That is pretty much common sense. Now, you are seeing two firms that have sold out. Unfortunately, it does not show us exactly what their position is besides the cost basis of -10 and -12 right here. So not very large positions, but overall you could tell the situation does look very bullish from institutional investors, and I do think we're going to see a lot more inflows for Q3 than we actually did see outflows. So that's what I expect. We will be watching the situation very, very closely. Now, let's get into the short interest data for AMC. We're seeing it go down just a little bit today. These numbers don't fully update until the end of the day, so in the later on video we will get a better picture of where we currently sit, but still over 20% at 20.45%, with the share utilization at 87.21%. So a comfortable level. There is still a lot of shares that can be sold short. You're not really at those levels where you can see a forced share recall situation, which I don't expect to happen overall, but I think this is a bullish thing because we want to see the short interest going up. That is the one indicator that really does matter here. Without short interest being really high, there's no short squeeze, there's no shorts to squeeze, but we are seeing these numbers extremely elevated, so that is a great thing. More shares available to be sold short. Short sellers are obviously going to take full advantage of that. Now, the shares that are sold short at 104.6 million shares, also a very bullish thing considering the volume has dropped off so much in the stock. That is ultimately why I am buying so many shares of AMC. Once the volume comes back into the stock, that's when you're going to see these big moves here in the next coming weeks. So all in all, very bullish. Free float on loan 22.38%, so also looking pretty good there. It stayed relatively flat, has not moved around a lot at all. Now, Stonko tracker data, gonna run through this one very brief as well. Out of the money calls for next week at almost 200,000, in the money calls at 24,440. So I do want to see where we do close today. If a lot of people take whatever premium that is left from this Friday from today's calls that are expiring and roll them over into next week, that's typically what we see. You can see a little bit of a gamma squeeze if we do see the price start to go up. We do cross over 40, get closer to 45 or $50. You could see a small to medium gamma squeeze. We're talking, a 20% gain. That's a, small to medium gamma squeeze. So that's what I expect. As you guys do know, don't expect anything major from the option chain until January 2022. This expiration date is going to be a massive week for AMC. Now, let's talk about this actual formation and the technical analysis that is happening with AMC stock. Now, we are seeing a bit of a sell-off right now as we do currently speak. We just actually went negative on the day, but if you were looking at this very micro, since this Thursday that we did rally, this was back here, what was this, September 30th. You guys can see this U shape, right? This is the cup. We are looking for the formation of the handle. As you guys can see right here, this is obviously what we are looking at happening right now with AMC. We're not quite at the top where we will actually see this handle start to actually formate, and then we will see the rally from that. This is a big technical factor that a lot of trading algorithms do pay attention for. So this is something I'll be watching very closely, but it is obvious we are forming a cup and handle formation. It's not fully there yet. It's not fully defined, but it's obvious to see here on the chart. So I do expect a continued breakout to the upside. Once we do get up to about $39, you're gonna see a little bit of a pullback, just like you do see here on this demonstration of a cup and handle. Really consolidation up and down, but trending downwards until you do get that handle formation, and then you should expect that big gap up. So in the next coming weeks, we should see this start to play out a little bit more, and I shouldn't say in the next coming weeks, really in the next 10 trading days or so, we should get a better idea of if this cup and handle formation is actually going to play out, or if it is going to be a dud. It can really go either way, but I do think it looks very good, even considering earnings are on November 3rd. Widely expected to be very positive earnings as well as good guidance. So all in all, this is a huge win for AMC. Looking at a technical breakout, but we will have to watch this a little bit closer. Now, if you guys got some value out of this video, hit the like button for me. Consider subscribing to the channel, as well as let me know down below in the comment section, what do you guys think about all of this information. Now, I do apologize for stuttering around a couple times trying to get through this as fast as possible. I have my daughter today. She is currently taking a nap, so hope you guys can bear with me and you guys understand why I am just trying to get you guys this information as fast as possible. So do everything I said, hit that like button, subscribe to the channel, let me know down below in the comment section what you guys think about all this information. Also, if you guys want to directly support the channel, hit the link for Public as well as the link for Webull down below in the description of this video. Get all the free stock your heart does desire. Also, if you guys want to be notified every time a trade is bought or sold in real time, check out the link for the buy and sell alerts. We do it all: day trade, swing trade, and make long-term investments with stock options and or crypto, so you can't go wrong by doing that. It literally pays for itself over and over and over again. We keep it very inexpensive, so basically anybody is financially able to join and be a part of that. Little bit more expensive than a Netflix subscription, so hopefully you guys take advantage of that. If you do, let me know and I will see you over there. But that is all for this video. I will see you in the next one.